What is a profit and loss report? Let's see. Profit and loss report, also known as income statement, is a type of financial report that has one main purpose: to show how easy it is for a company to create new wealth. Understanding the rationale of the report and learning how to use it can help you to understand how companies generate new wealth, help managers to improve the way the company generates wealth, and more importantly, also can help you identify businesses that generate wealth easily, opening the door to using this information to generate a lot of wealth for yourself and your family. It is an incredibly easy report and well worth your while to understand. Let's begin. At the very beginning, I want to introduce you to Jennifer and Mike. Jennifer is a lively, life-enjoying attorney that lives in a $2 million apartment in New York City. She drives a new Maserati Gran Turismo she just bought for $190,000. She earns about $270,000 per year working for a law firm. Mike is a software engineer, earning about $110,000 per year. He drives a nice car he bought 3 years ago for $20,000 and lives in a rented house that costs $2,200 per month in Orlando. Now, let's see if you can correctly establish who is going to possess $1 million first, Mike or Jennifer. All we need to find out is the answer to the next question: how easy it would be for each to earn $1 million in new wealth. To solve the question, we need to use the tool called profit and loss, P&L, or income statement. Let's see how it works. First, obviously we would need to find out the entire story. What people earn is just half of the story. We need to find out about expenses. Well, here they are. Jennifer pays $156,000 per year to pay down her mortgage. She has been told that unless she starts paying back her loan to Dad, she is in trouble. Additional $30,000 per year. She also pays an additional $26,000 to her student loan originators. She needs another $50,000 per year for living and general expenses. Here's what that looks like, ignoring tax for the moment. This is the correct picture. Jennifer generates new wealth, net income, to the tune of $8,000 per annum. Somewhat disappointing taking into account the size of her salary. The main thing we can do to answer the question of how easy it is to generate new wealth is to find the ratio of her net income to her gross income. In Jennifer's case, only about 3% of her salary turns into net income, or new wealth, also called profit margin. Let's look at Mike's current expenses now. Mike spends about $36,000 on living. He has some expenses connected to some private projects he is entitled to pay at about $10,000 a year. His rent is $26,400 per year. For each $110,000 of gross income, Mike is generating net income of $37,600, which is about 34%. Now, that's a very good profit margin. In business, when the profit margin is high, we understand that someone is willing to pay well for something that is easy to produce, which takes little investment to make. For example, Apple is selling smartphones at 40% profit margin, while on the other hand, another company like Huawei is selling smartphones at 12% profit margin. As a rule of thumb, the higher the profit margin, the better it is. Congratulations! You now understand the basics of a profit and loss report, also known as an income statement. A couple of things to remember before you move on. 1. P&L is always done over a known time period: month, year, quarter. 2. P&L does not answer another question regarding wealth, which is how much new wealth is generated from one's asset or possession's valueless obligations. Check out Balance Sheet Tip for more on that.